What I'm about to share with you could be the difference between building wealth and watching your hard-earned money slip away right before your eyes. Whether you're a seasoned investor or just starting out, this message is for everyone. We're heading into a financial landscape that will punish those who play it safe. And when I say punish, I mean it will completely destroy the purchasing power of anyone sitting on cash, thinking they're being smart. Trust me, they're not being smart, they're being foolish. Now, before I dive into the specifics, I need you to do something for me right now. Hit that subscribe button, smash it. Why? Because the content I share on this channel is designed to help you make money, protect your wealth, and give you the exact strategies that the wealthy use every single day. If you're not subscribed, you're missing out on critical information that could transform your financial life. So go ahead, do it now. While you're at it, hit that like button and leave a comment below telling me what percentage of your portfolio is in cash. I want to know, because I guarantee some of you are making a massive mistake. Here's the reality. Cash is trash. I've been saying this for years, and it's never been truer than it is now. You might think that having money sitting in your savings account, making 2%, 3%, or maybe even 4% in some high-yield accounts means you're doing okay. But let me be blunt, you're not. Every single day, inflation is quietly eating away at your wealth. While you're asleep, thinking your cash is safe, it's actually losing value. The cost of everything, groceries, gas, housing, healthcare, is rising faster than the interest your bank is paying you. Let me break it down for you in simple terms. If you have $100,000 sitting in cash and inflation is running at 5 or 6%, and trust me, it's much higher than what the government tells you, you're losing $5,000 to $6,000 a year in purchasing power. That's real money, just vanishing into thin air. Your bank account might say $100,000, but in terms of what you can actually buy with that money, you're getting poorer every month. This is financial suicide, and I see it happening all the time. You know what kills me? People come up to me and say, Kevin, I'm being cautious. I'm waiting for the right opportunity. I don't want to take risks right now. And I look at them and I say, you're taking the biggest risk of all. You're guaranteeing a loss, because that's what holding cash is, a guaranteed loss. At least when you invest, you have the chance to grow your wealth. But sitting in cash, that's not being cautious. That's being ignorant. Now, I know what some of you are thinking. Kevin, what about a recession? What about a market crash? Shouldn't I have cash on the sidelines ready to deploy? And here's my answer. Yes, you need liquidity. Every investor needs liquidity. But there's a massive difference between strategic liquidity and hoarding cash, like you're preparing for the apocalypse. Strategic liquidity means having enough cash to cover emergencies and take advantage of opportunities when they arise. We're talking about 3 to 6 months of living expenses, maybe a little more if it helps you sleep at night. But beyond that, every extra dollar sitting in cash is a dollar that's not working for you. Let me tell you something about the truly wealthy. They don't hold cash. They hold assets. Assets that generate income, assets that appreciate in value, assets that work for them 24/7. Real estate, stocks, bonds, businesses, commodities. These are the vehicles that build wealth. Cash is just the tool you use to buy these assets. If you're holding massive amounts of cash, you're using the tool wrong. Now, let's talk about what's happening right now that should terrify anyone sitting on cash. Central banks around the world have printed more money in the last few years than at any point in history. When you flood the system with money, what happens? The value of each individual dollar goes down. It's simple economics. Too much supply, lower value. Your cash is being diluted every single day by monetary policies that are completely out of your control. You can't stop it. You can't fight it. The only thing you can do is protect yourself by getting out of cash and into assets that hold their value, or even better, increase in value. Think about it this way. If I told you I had an investment that guaranteed you would lose money, would you put your hard-earned savings into it? Of course not. But that's exactly what you're doing when you hold cash in this environment. You're choosing the guaranteed loser over potential winners. It makes no sense, none whatsoever. Yet I see educated, smart, and successful people making this mistake every single day. It drives me crazy because they're working against themselves. So let me tell you exactly what you should be doing instead. Let's get into the strategy, the playbook that I use and that every smart investor uses to protect and grow their wealth. I'm going to be very specific here because I don't believe in vague advice. I believe in giving you actionable steps that you can start implementing today, right now, as soon as this video is over. First, let's talk about dividend paying stocks. This is my bread and butter. A significant portion of my portfolio is in these stocks, and for good reason. When you own dividend paying stocks, you own pieces of real businesses that generate real cash flow. These businesses pay you every single quarter like clockwork. That's passive income. You wake up in the morning and money has been deposited into your account. That's the dream, isn't it? That's what wealth looks like. Now, I'm not talking about speculative garbage. I'm not talking about some tech company that's never made a profit and probably never will. I'm talking about stable, reliable companies, utilities, consumer staples, healthcare, financial services companies that have been paying dividends for decades. These are cash flow machines. And in an inflationary environment, many of these companies can raise their prices, which means their profits go up, which means your dividends go up. Your cash sitting in the bank, it's not going up. It's going down in real terms. But a solid dividend portfolio, that's keeping pace with inflation or beating it entirely. Let me give you some real numbers. If you invest in a diversified portfolio of dividend aristocrats, companies that have increased their dividends for 25 consecutive years or more, you can easily get a yield of 3 to 4%. But here's the beautiful part. That's just the yield. The stock prices also appreciate over time. So you're getting your 3 to 4% in dividends plus capital appreciation. Over the long term, we're talking about total returns of 8, 10, even 12% annually. Compare that to your savings account giving you 3%, while inflation runs at 5%. It's not even close. It's not even in the same universe. Next up, let's talk about bonds. I know, bonds are boring. Everyone thinks they're for old people. But let me tell you something. Bonds are having a moment right now. After years of low interest rates, we've seen rates spike. And when rates are high, bonds become attractive again. You can lock in yields of 5%, 6%, even 7% on quality corporate bonds and government bonds. That's real income. That's guaranteed income. And unlike stocks, bonds have a maturity date. You know exactly when you're getting your principal back. This is about balance. You don't put everything into stocks and you don't put everything into bonds. You create a portfolio that generates income from multiple sources and gives you stability when markets get choppy. Here's what I do in my own portfolio. I ladder my bonds. That means I buy bonds with different maturity dates, some maturing in 1 year, some in 3, some in 5, some in 10. This way, I'm always having bonds mature, and I can reinvest that money at whatever the current rates are. If rates go up, great, I'll reinvest at higher rates. If rates go down, I'm still holding bonds that I bought when rates were high. It's a strategy that smooths out the volatility and ensures I'm always earning something. And what about your cash sitting in the bank? It's just sitting there doing nothing, being eroded by inflation. That's not working for you. Bonds, however, are income-producing assets that keep your money working even in uncertain times. The third pillar of building and protecting wealth is real estate. Now, I'm not saying everyone needs to go out and buy a rental property, although if you can, you absolutely should. Real estate is one of the greatest wealth-building tools in human history. But if you can't buy physical property, you can invest in real estate investment trusts. These are companies that own and operate income producing real estate, apartment buildings, office buildings, shopping centers, warehouses. When you buy shares in a REIT, you're essentially becoming a landlord without having to deal with tenants, maintenance, or any of that headache. And here's the key. REITs are required by law to pay out 90% of their taxable income as dividends. That means massive yields, often in the 5 to 7% range or higher. Plus, real estate tends to appreciate over time, and rents tend to go up with inflation. So you're getting income and you're getting inflation protection. It's a double win. I cannot stress enough how important real estate is in a portfolio, especially right now. We also need to talk about the importance of diversification, because I know some of you are thinking, what if I put all my money into stocks and the market crashes? What if I buy bonds and interest rates change? What if real estate values drop? These are legitimate concerns. And the answer is diversification. You spread your risk across multiple asset classes. You don't put all your eggs in one basket. A properly diversified portfolio might be 50% stocks, 30% bonds, 20% real estate, or maybe it's 40%, 20%. The exact percentages depend on your age, your risk tolerance, and your financial goals. But the point is, you're not concentrated in any one thing. And most importantly, you're not sitting in cash, earning nothing while inflation destroys you. When you diversify properly, you're building a portfolio that can weather any storm. If markets crash, your bonds and real estate will help cushion the blow. If interest rates spike, your dividend stocks and REITs adjust. If inflation runs hot, your real assets keep pace. This is how you protect wealth. This is how you build wealth. And most importantly, this is exactly what you cannot do if you're sitting in cash, paralyzed by fear or ignorance or both. Let me tell you a story that illustrates this perfectly. Years ago, I met with an investor who had $3 million in cash, 3 million just sitting there in a savings account, earning next to nothing. I asked him why. He said he was waiting for the perfect opportunity. He was waiting for the market to crash so he could buy stocks at a discount. And I looked at him and said, "You're making a huge mistake." And I mean that with respect, but you're making an idiotic decision. You know what happened? He waited and waited. Meanwhile, the market went up 20%, then 30%, then 40%. He missed all of that growth. Even when there were small pullbacks, he still didn't buy, convinced that a bigger crash was coming. Fast forward to today, and he's still sitting on cash. And that $3 million has the purchasing power of maybe $2 million compared to what it was worth back then. He lost $1 million by doing nothing. By trying to be safe, he guaranteed his own failure. Don't be that person. Don't let fear or analysis paralysis destroy your financial future. The perfect time to invest is always now. Not tomorrow, not next week, not when the market pulls back 5%, now. Because time in the market beats timing the market every single time. I've been investing for decades, and I can tell you with absolute certainty that nobody, and I mean nobody, can consistently predict market tops and bottoms. The people who build wealth are the people who stay invested. They keep putting money to work. They understand that markets go up over time despite short-term volatility. Here's what I want you to do today. Right now, as soon as this video ends, I want you to look at your portfolio, look at how much cash you're holding. If it's more than 6 months of living expenses, you need to deploy that capital immediately. Open a brokerage account if you don't have one already. Start buying dividend-paying stocks. Buy a bond fund or individual bonds. Invest in a REIT or a real estate fund. Just get that money working for you. Every day you wait is a day you're losing money to inflation. Every week you sit on the sidelines is a week you're missing out on potential gains. This isn't about being reckless. This is about being rational. This is about understanding basic economics and acting accordingly. And let me address the people who are going to say, "But Kevin, I'm scared. The market feels high. The economy feels uncertain. I don't know what to do." First of all, the market always feels high to somebody. There's always a reason not to invest. There's always some crisis or concern or geopolitical event that makes people nervous. If you wait for perfect conditions, you'll be waiting forever. Second, uncertainty is the price of admission. If you want returns, you have to accept some level of risk. But holding cash isn't eliminating risk. It's just choosing a different risk. The guaranteed risk of losing purchasing power. I'd rather take my chances in the market where I have the potential to win than sit in cash where I'm guaranteed to lose. Now, I know some of you are still skeptical. You're thinking, Kevin talks his book. He's telling me to invest because that's what he does. And you're right, I do talk my book. But I talk my book because my book works. I've built wealth using these exact strategies. I've made millions, hundreds of millions by understanding that cash is a depreciating asset and real assets are what build fortunes. If you want different results, you need to do things differently. If you want to build wealth, you need to stop hoarding cash and start investing in assets that generate income and appreciate in value. Here's my final challenge to you. I want you to commit right now to taking action, not thinking about it, not researching it for another 6 months, but actually doing it. Take 10% of your cash, just 10%, and put it to work this week. Buy some dividend stocks, buy a bond fund, invest in real estate. Just do something, get off the sidelines. Once you do that, once you see that money starting to work for you, once you see dividends hitting your account or your portfolio value increasing, you'll wonder why you waited so long. You'll kick yourself for all the time you wasted sitting on cash. And listen, I need you to do something else for me. If this video's opened your eyes, if you're realizing that you've been making a mistake with your cash, hit that like button right now. I need you to subscribe to this channel if you haven't already. And I need you to drop a comment below telling me what you're going to do differently. Are you going to buy dividend stocks? Are you going to invest in bonds? Are you looking at REITs? Tell me your plan. Because when you write it down, when you put it out there publicly, you're more likely to follow through. This channel exists to give you the real talk that nobody else will give you. I'm not here to sugarcoat things or make you feel good about bad decisions. I'm here to tell you the truth, even when it's uncomfortable. And the truth is, if you're sitting on a pile of cash right now, you're making a massive mistake. You're choosing to lose money. But the good news is, you can fix it today. You can turn this around and start building real wealth. The tools are available. The strategies work. All you need to do is take action. So stop making excuses. Stop waiting for perfect conditions. Get your money working for you. Your future self will thank you. Now go out there and make it happen.